Hello traders, this is Jerome Manglona, and in this week's Market Watch, we do have a couple of pairs that I am looking to trade this coming week. I see a couple setups, and what I'm going to do is take you through them right now. The first pair I'm looking at is the pound US dollar. Now, as you can see on a daily chart, we have hit previous highs right about here. All right. And we also are in a range because we have our lows right here. Okay. And this is on a daily chart. So you can see that for the past couple months, almost few months actually, because we're nearing October, we've been in this consolidation. So let's go down to a more reasonable time frame. I do like the 4 hour. I'll either trade the 4 hour or the 1 hour. That's typically my little, my couple trading time frames here. So you can see on the 4 hour, we were making very nice uptrend moves, higher highs, higher lows. We had a slight consolidation area here before we broke out of it and continued the move up. Now, conversely, we've hit the high on the dailies, and we've made lower highs, lower lows as of right here. Boom. We have been in a downtrend. Okay, so you can see that with structure itself, you can see that these levels are being respected. We had a nice little micro trend move and then the push down, and I know a few of our traders have caught this huge move down. So what does this mean? What does this mean? Well, coming into this open here, I already noticed at least one thing here for I already noticed this little move. So if we mark from this previous swing all the way up here, actually this is a higher high. There you go, boom. And then the outside return, and then the push up right into resistance. What I'm seeing, guys, is we do have a nice cipher pattern here on a larger time frame. So if I get my fibs here, we do have a 50%. It's in my range for a cipher. Let's see if the fib extension gives us what I want. Boom. And we're actually going to go over here. Boom. Back down. And boom. There you go. Cool. Hit the 1272. Did not pass the 1414. That sets us up for a very nice cipher pattern here. If I get my fib retracement once again, and we do a fib retrace for the overall move, and I'm looking for that 786 there. 786 to 886. That's our kill zone right there. Boom. All right. So if I take my fibs here, we have X to A to B, B to C, and C to D, right on that 786 retracement here. Now, there's a thing called a Fib Inversion. Let me just make sure we have some confluence in this. So here's a 1272 on a Fib Inversion. Let's try here. Boom. Boom. And we'll go up here. Boom. We got a 1414. This 1272 lines up with the 786. So we can see that we're starting to have a little bit of a cluster here. We can use this fib extension from our most recent leg here. And you can see that we get a 1618 pretty near to that 786. So we're seeing a nice little cluster here. Last one is from this swing down, back up. I love I love it when I get in confluence here. So here's our 618, a 1414 on this move here for the Fib extension. Sounds like mumbo jumbo, but what I'm doing is I'm looking at these clusters of fibs to give us a nice probability of where this market's going to fall into before reversing. Obviously, you can see we're right there. We're right on that 786. We have a little bit more to go, just maybe 10 pips, 20 pips more maybe, I'm thinking, before this market completely reverses. And what you're seeing here, guys, is a cipher pattern. So definitely watching for a bullish cipher pattern here. Oops, if I could spell. Come on, bullish cipher pattern. Boom. So let me get rid of all this cluttered mess and leave the harmonic on there. Now that we've identified what we're looking at here, we're going to look at targets. So for targets, I typically use a fib retracement of the highest point of the harmonic to our entry point, which is right about here. And I'm looking at the 382 and the 618 as targets. So, oops, not that one, this one. So here's our target levels. So if I bring in this little tool here for risk to reward, our first target, well, first of all, let's get our stops. Okay, so for stops, you could place it below our X leg, or if you want to stick to the Fibonacci ratios, what you could do is do Fib Inversion here, and what you're looking for is that 131 or 1.131, sorry, and that will be your stop right down here. Boom. Let me skinny this up here. We don't need it to be super fat. There's that. So first target is near 1-to-1. Second target is definitely just under a 1.5-to-1. So is this a nice trade to take? I believe so. I like it. This is a 4-hour chart, so definitely use proper risk management. If you don't want your stops that far, it doesn't have to be that far, as long as it's under X, guys. So you could place it up here, and then that way your first target is definitely over a 1-to-1, and then your second target is approaching that 2-to-1 mark. So it's personal preference, guys, but this is one of the trades we're looking at, bullish cipher pattern on the pound dollar 4-hour chart. Okay, the other trade we're looking at, if anybody has the euro yen in their watch list, you could see, well, let's go back to our daily. This is how I do my top down. I just want to see where we're at here in price. You can see that on the dailies here, guys. We've had our previous highs up here. We've never broken previous highs, and we've had our previous lows here, which we have never broken as well. So we've been in this consolidation. If you break down to a 4-hour, you can see that after these highs have been after these highs have been hit, you can see that as of right here, boom, we get the lower low, break at the lower low, lower close, retracement up back in, right? Form this little, looks like a retest. I wouldn't consider a double top, but retest. And then we finally broke to the downside. Then the market consolidated as of right here. You can see on a 4-hour time frame, it consolidated. The gap pushed us up. We had a one-touch trade, if all you naked traders, and the push up there, and then boom, now we are back into this consolidation mode right here. Okay, look at that. Boom, there's our highs, and you can see our lows come back in to where that one touch trade is. So we've had 1, 2, 3, and now we're in our fourth attempt to break this. And you can notice that with our highs here, our highs have gotten lower. You can see that we may have not gotten lower as far as higher highs or lower highs, but you can see the closes have been lower. That should show you a little indication that there may be a possibility that this market, right, here's the highest point, here's the second highest point, and the third. You can see that this market has just been slowly going into a down move on a larger time frame, being called a descending wedge pattern or descending pennant. So if this continues to the downside, and it never breaks lows, then you can see some sort of a descending wedge. And typically with the descending wedge, what we're looking for is a breakout to the downside. Now, until then, what you could do, all right, if I just ignore not necessarily ignore the fact that it's a descending wedge, but take into a fact that we are in this range, what you can do is buy at these lows. So what we could do is we could either watch for the 4-hour chart to give you a reversal signal. We do have a kangaroo tail here, but it's a little too high for my liking. I like, for example, these kangaroo tails here, this kangaroo tail here, and I like the fact that this kangaroo tail is with near the body here. This kangaroo tail is definitely within the body of the previous candle. I like that. Railroad tracks here. This kangaroo tail is not within the previous body, and the tail is just not. The tail of the previous candle is just not as convincing, So it's a weak kangaroo tail in my opinion. But we can go down to a 1 hour on this chart and see that we have a retest setting in, so it could possibly be forming a double bottom. Now, there's a couple ways to trade a double bottom. One way is you can have a trend line from the most recent move of the swing here. Okay, so you can see that the market came down, right? Little stutter steps, but it's setting the low, right? So here's the high, here's the low, here's the lower high it's set in, right? After its little stutter step. And then it pushed way back down. Had a nice little flag here. If you're a candle pattern trader, had a nice little flag, and then pushed down. Now we're forming this potential double bottom to get a break to the upside. Sorry, my lines aren't that straight. So, here's one way to trade a double bottom. You can match up the tops of the swing and just wait for the break of the trend line. That's going to be more aggressive, guys. I'm not saying it doesn't work, but it's just super aggressive. You don't know if, the double bottom is going to be true. I mean, even though it sets a double bottom, it could just show us a slight retracement and then fall and break this overall consolidation. So if you want to be a little bit more conservative, we have a little thing called the 2618 trade. And that's as long as it sets in that double bottom here, what you're going to be looking for is you're going to be looking for that push up, right? And I'm expecting probably a push into previous resistance here, something like that, right? And you want to make sure it breaks these highs right here, okay? So it's going to push up. So after it breaks this high, anywhere, guys. I mean, it doesn't have to go up way up here. It could literally turn from down here, but I'm just saying it may go at least here. Look left. We have support and resistance. We have all these resistance points for structure here. So as long as it breaks these highs right here, then now you're going to be waiting for the pullback. And when you get the pullback, right, the pullback could come in right into previous structure. But the key part of this 2618 trade is that you get a 618. Okay, so boom, right? You get the 618 retracement. Okay, so as long as it breaks this previous high here on this double bottom, you're waiting for the turn, the retracement, outside return, pullback, whatever terminology you want to use, and you're waiting for that 618 retracement, and that, my friends, will give you a nice entry of a higher probable reversal, and then you would be buying your way up. Okay, and you'd obviously be placing stops below the double bottom. That'll give you a risk to reward of something like this. Okay, you don't need it to be too crazy far, just underneath the double bottom. And you, of course, always want to at least aim for a 1-to-1 for your first target. That will be right back up into previous resistance. And then after that, as soon as you hit your 1-to-1 target, move your stops to break even, and then just write it out. And I could potentially see it coming right back up into these previous structure here. If I put my arrow, you will see, boom. Okay, you got some lows, little false break, break to the downside, resistance, break to the upside, support, support, break to the downside, resistance, resistance. So nice little structure zone here. And that's what I would be looking for if I was to play out this trade. So those are the two trades I'm looking out for this week, guys. One's on a 4-hour chart with the pound yen, or not the pound yen, the pound dollar, as far as the cipher pattern. And then the other trade is this euro yen on the hourly chart, looking for a potential reversal of this double bottom, maybe a 2618 trade, depending how aggressive you guys want to be. So until next week, guys, happy trading.